Before going all in on investing in a brokerage account, there are a few investments that you need to make to ensure that you can put your wealth building process on autopilot. Now, if you shouldn't go all in on investing in a brokerage account right away, where should you start? Well, for most people, they should start with something that they already have access to, and that's their corporate sponsored 401k. I believe that investing in a 401k, especially if you get a match from your employer, is a phenomenal way to start investing, especially early on out of the gate when you haven't really built anything yet. And let's be honest, if you're getting 4, 5, sometimes 6% match from your employer, you'd be crazy to leave that money on the table. Now, over the last 5 or 6 years or so, there have been a lot of people out there talking about that investing in a 401k is a scam. Now, I recently posted a video on my channel where I went over some of the biggest lies that we were told about money, and investing in a 401k is a scam is one of those lies. Look, I know there are some people out there that are going to say, why am I going to tie up my money for 20, 30, or 40 years when I can use it now? And that's valid, especially if you're going to use that money to actually grow wealth. But most people don't do that. If they're not investing in their 401ks, they're using that money to buy cars, take vacations, and spend on a bunch of junk that they don't even need. Look, I'm not trying to sell you any courses, and I'm not trying to sell you any books. I'm just telling you the real here. Investing in a 401k where you can actually get free money that's going to be in a bucket that's going to build wealth over a long period of time is the move. So not only do you get to take advantage of that match that your company's giving you throughout the year, investing in a 401k, a traditional 401k, it actually goes in tax deferred, reduces your overall tax base. The 2026 tax brackets came out a couple of months ago. I was taking a look at them. In the US, you know that we have a progressive tax system, meaning the more money that you make is taxed at a higher amount as you continue to go up. So if you are an individual filer in the US and you make $60,000 a year, the first $50,000 that you make is going to be taxed at a 12% rate. It's a little bit more than 50,000, but I'm just rounding it down. And then the next $10,000 that you make above that 50,000 will be taxed at 22%. But if you would invest $10,000 into your corporate sponsor 401k, it would effectively reduce the overall income that you earn for the year, meaning that your overall maximum tax liability would be on $50,000 and it would be taxed at 12%. Now, I know a lot of people may not be able to invest $10,000 into their 401k, but that's the way that you have to start thinking about this. How do you effectively reduce the amount that you pay in taxes? Now, if you're married, for the married couples out there, I believe that the 12% tax rate caps out at around $100,000 a year. So if you're a couple and you're making $120,000 a year, investing in a 401k will allow you to reduce your income enough to where you'll be taxed at the lowest possible rate of 12% for the entire year. So these are some of the things that you should be taking a look at when you're looking at building out your long-term wealth strategy. How are you going to use our tax code to make sure that you can keep more money in your pocket instead of paying it out to taxes? Yes, I know you're going to be paying those taxes later whenever you do your 401k withdrawals, but when you're in the wealth building process, you want to keep as much of your money as possible to help you build that investment base. Now, the 401k is a great place to start. And now that we've got that covered, we're going to move on to the next account that we're going to be taking a look at, and that is an individual IRA. This is an account that we control outside of our employer. Investing inside of this account will allow us to have much more options to invest in. When investing in a corporate sponsor 401k, they may limit the amount of investment opportunities that are available to you. But when you invest in your own individual retirement account or IRA, you can invest in whatever you want within the stock market. And the best part about it is all of that money is contributed post-tax. As your investments grow within that account, you'll never pay any additional taxes on that whenever it's time time to make a withdrawal. One of the strategies that I started to employ whenever I first started my wealth building process is I invested just enough money in my corporate sponsor 401k to lower my overall tax burden. Anything above and beyond that went into my individual retirement account that I had control over and now continues to grow tax-free. This account gives you much more control and more options on what you can invest in. Retirement accounts are great, but they're not the only way that you can invest in the stock market with pre-tax dollars. This next option allows you to invest pre-tax dollars that grow that you can actually pull out and you don't pay any taxes on it whenever you withdraw. And that is a health savings account. Guys, I invest in my health savings account every single year. This is an account that you put money into, and I believe for 2026, for individual filers, I believe it's $4,400 a year is the maximum that you can invest in this account. And essentially what this account is an account that you control that you can use for qualified medical purchases. So if you have any copays, whenever you go to the doctors, you have any prescriptions, surgeries, anything medical related, you can use that money for. And it never goes away. It stays with you. Even if you go to another job, you can take that with you. And here's the kicker for this, and this is why I love health savings accounts, because not only can I put pre-tax dollars into this account, which effectively reduces my taxable income, I can then take that money and invest it in the stock market, and that money grows tax-free. And I can then take that money out and use it for qualified medical purchases. So for me, my plan, right, if I want to retire at 55 years old, one of the things that most people cite as why they can't retire earlier is because they need the medical coverage. Well, if I'm investing in a health savings account for 10, 15, 20 years, I now have enough money where I can bridge the gap between, say, 55 to 65 when Medicare rolls in. So this is just another opportunity for you to invest in an account that is going to give you a long-term wealth building benefit that you can utilize now or in the future. It's completely up to you. Up to this point, all the investments that we've talked about have been financial accounts, but there is an investment that impacts all of those accounts, and that is investing in yourself. Let me tell you something. Investing in yourself is going to have the highest ROI on anything that you ever invest in over the course of your life. When we focus on leveling up from a career perspective, we think about going and getting that certification, finishing that undergraduate degree, going to get that master's degree, whatever that may be. Those are the things that are going to allow you to increase your earning power. And in today's day and age, it's never been easier to figure out how to actually do the activities that's going to allow you to level up financially. There are so many certifications out there that are available, especially in the tech world. If I had to start all over again, I would absolutely be doing something in the tech field. I'd go out there, I would get my certification, and I would get busy and get right to work. That is where most of the opportunities are out there. And there are some certifications out there that will put you in a position to make a lot of money, but all you have to do is go out there and get it. Investing in yourself should never stop over the course of your life. As a matter of fact, every single year you should be setting aside a certain amount of money that is purely dedicated to investing in yourself, whether that's through certifications, education, reading books, seminars, conferences, clubs, mentorships, all of that. I think this is one of the most underrated things that most of us overlook, and that is investing in ourselves. The problem with all the investments that I've talked about in today's video isn't knowledge of them or knowing about them. It's actually just staying consistent. So the final investment that we need to make to ensure that we can build out our financial futures is making sure that we invest in automation. And automation doesn't have to be fancy, and it doesn't have to be complex. I've automated certain parts of my life and I don't even think about it anymore. So for example, bill paying, all of my bills are on auto pay. I know how much they're going to be every single month. I don't need to worry about writing a check, going online, making a payment, doing any of that. All of that's on auto payment. All my investments are on autopilot. I have a certain amount of money that goes from my checking account into my brokerage accounts whenever I get paid, and all of those investments are done automatically. All of my investments in my 401k, those are done automatically. The investments in my HSA, those are done automatically. Most of my life has been automated, and I can tell you it is probably the game changer that helped me to actually 2 or 3x my net worth over the last 5 years. If we can take ourselves out of the equation when it comes to doing a task like investing, we're going to be much more successful because it's already done for us. We don't have to do anything. Look, most of us are lazy by nature. I know at least I am. And being able to set things on autopilot and invest automatically has been a game changer for me. When you have these 5 things set up correctly, you really don't have to worry about anything. All your bills are paid, your investments are being made, and after a while, you'll start to see your investment accounts are growing, your retirement accounts are growing, your health savings account is growing because you're investing in the ultimate ROI, which is investing in yourself. So what do you guys think about the 5 investments that I laid out? I know some people don't like 401k retirement accounts. They don't like IRA accounts. I think they have a place. I like having money in multiple buckets, multiple places that are going to pay me out over the long term whenever I'm no longer able to work. But I'm curious to hear what you guys think. Thanks for watching, and I'll see you in the next video.